Thank you guys all so much for coming. For those of you who have been to a Telescope dinner before, welcome back. For those of you that it is your first time attending, thank you so much for being here for our last open Fellows dinner for the summer. For those of you who don't know, Telescope Ventures runs a fellowship program for engineers and designers, connecting them and engaging them with some of arguably Arizona's top performing tech startups, where our fellows, they get selected to the program, get to be mentored by the company CEO or another high-level executive. The whole point of the program is to really engage students as they're leaving university, get connected to the community, and be leaders on their own, help them build their own brand, their reputation as they're coming out of that setting. Tonight, I'm extremely excited because we have some incredible set of folks up here in the venture capital and capital space in general here in Arizona, who, in my opinion, are sort of look at from a 30,000 foot view of what's happening in the landscape in terms of tech and startups and economic development. So I do want to introduce Romi Dhillon, who was part of Kickstart seed fund in Utah and is now here in Arizona. Randy Gustafson, who's part of the ACA, the Arizona Commerce Authority, who arguably is one of the leaders in economic development in Arizona, and Nate Mortensen, who's over at Tallwave Capital. So thank you all for being here today. And also, I do want to take this time to thank Corey Law, who has been so kind to sponsor this summer for our fellows to put these dinners together. We really wouldn't have been able to do it without them. So thank you to Corey Law, and thank you to the city of Tempe for allowing us to use this space. Jill, if she's not here, she was going to say something, so maybe she'll at the end. Basically, Tempe, the city of Tempe is opening up their library. It's also making that into a collaborative workspace. So she can talk more about that. She's wearing all purple today if you want to find her and learn more. Telescope Ventures, if you guys want to partake in other dinners and be a part of our community, just follow us on Facebook or Twitter, hashtag TelescopeV, Telescope Fellow. The rest of our series for our fellows will be closed dinners. So if you would like to be a part of that, sign up for the mailing list or be active on our social. Great. So tonight for our panel, it's really meant to be an open discussion, very collaborative talk. I have a bunch of questions I really personally would like to ask these guys, and then I know a bunch of you have some questions as well, so we'll open that up. So without further ado, Romi, if we could start with you, sort of, giving us a little background on yourself and how you got into venture capital.
Sure. Good to meet you, everybody. One of the things that all failed to mention is that he works for me at the Bio Accelerator Fund as well, so I'm his boss.
Some things are left better unsaid. Well, in this case, actually, what an honor. Yeah, in this case. Yeah.
Set the record straight.
Put me in check.
As far as me, I'm just going to be, really recent about my background. I moved here from Utah after working in Kickstart. In 2012, one of my first deals found that elusive J-curve, and that deal was Infusionsoft. And they were just growing and doing wonderful things. But as all startup companies do, they were burning through a lot of capital as well. So Clayton Mask and the founders, they called me on down to run their deal team, just their deal desk and try to help them raise more money. And that's when in 2012 we raised a Goldman round. And then in 2014 we raised the Bain round as well. As I was buttoning up the Bain round in 2014, I decided to step away and work with the ecosystem here in Phoenix. So more or less just been a passionate advocate for what's going on here. We have, according to my list, I think 85 startup companies, right, that are doing probably about $5K a month in revenue. That surprised me, kind of shocked about that. And I think that there are really interesting things happening here. And in the last 4 or 5 months, I joined on with Bio Accelerator and working with Mary Ann, trying to help her fill out her fund, really help her get her ducks in a row, if you will, when it comes to, not only how you manage a deal, but how you commit to an investor relations practice, and really trying to finance a lot of the digital health startups that we have here as well. And then I hired Kunal, which I think is probably the best thing to happen to him. There you go. Yeah.
Thank you, Romi. Absolutely.
So my turn. So I'm Randy Gustafson, and great to be here tonight. First time in the space. It's really cool. I have a crazy, wacky background. I am from Arizona, go back over 50 years, went Chaparral High School, spent most of my career away, moved back 10 years ago. But my background includes nuclear submarines as a nuclear engineer, designing weapons for the weapons on nuclear submarines today, doing defense contracting, being a CPG marketer, marketing to women 18 to 54 in big, huge multinational corporations, C-level executive of a hedge fund, top 5 in the world, working for mostly billionaires, and moved back to Phoenix, became a consultant and started writing business plans for 2-person companies, all kinds of networking, did online marketing, search engine optimization and lead gen for about 1,000 companies around the world for web.com that had a Scottsdale office here. And this job fell in my lap. So I say the crazy background because when I got hired, I've been doing this 4+ years now, they said, you've got a really wacky background and you can talk to anyone. And so I do, and I have. And as Kunal said, we're economic development. We're, the ACA is over the state of Arizona. We work with all kinds of economic partners. I have the honor and privilege of sitting at tables with these gentlemen, Kunal, many of you, and as I tell people, we're kind of schmucks in the middle to help connect the dots. So we have some big programs. We'll probably talk about some of them. Our most well-known is the Innovation Challenge, but I'm not a VC, but I work with all the VCs, all the angel groups, and we've touched over 1,000 unique high-tech and science-based companies in the last 5 years, have a lot of interesting statistics, and so that's my story, and I'm sticking to it.
Okay. You can tell he can talk to anybody because he can wear any color on his shirt. He's awesome. I'm Nate Mortensen. I grew up here actually in the city of Tempe, so that's pretty cool. Went to Tempe High just down the street. Went to ASU for my undergrad and worked for 3 Arizona companies before going to grad school. So Arizona native, it's fun to be here, it's fun to be back, and thanks for just showing up, you know. I think this is good. So as we go forward, like, ask any questions. I think we'll all be pretty candid when that point in time comes. I run Tallwave Capital, which is a seed stage venture fund based out of Scottsdale, Arizona. We invest in the greater Southwest, Mountain West, and West Coast. So we try to find companies that have a product that's relatively complete, that have customers that like it, and if they're paying for it, even better, and a management team that is somewhat complete in terms of we have an idea of who's going to actually be running the company when we invest. So to date, we have 12 portfolio companies and that have been invested into in the last 24 months. 6 are in Arizona, 2 are in Utah, 3 in LA, and 1 in San Diego. So that kind of gives you a spectrum of where we invest and how we invest, and I'm sure we'll get into some more of the details at that point. But my job is really to find good companies, to do the diligence or research behind them, and then help support them as they grow, because all companies run into challenges, even the best ones. So that's me in a nutshell.
Awesome. Thank you, guys. And sort of before we get into the questions, I just want to take a quick survey of the room so we can get a better idea of maybe the answers that we might want to give. How many of us are or consider us entrepreneurs, sort of have our own company, and sort of starting that journey? Awesome. Who here is still a student within a university setting here in Arizona? Awesome. And how many of you here graduated and now are in the community, sort of doing your own thing in entrepreneurship and startups? Awesome, cool. So you get a better idea of sort of the type of crowd that we have. And so with that, Romi, I would like to start with you. Nate and Randy, please feel free to chime in on this. But give us an idea. A lot of times people think of VC, it's this Hollywood type of world where, you know, startup founder gets a bunch of funding and they go off and purchase nice cars, the company's doing really well, and you know, the rest is sort of just movie screen. What's the actual difference between that typical Hollywood script funding process and the VC funding process, and how it actually is, right? So you can paint that picture for us.
Right. From the VC perspective.
Exactly.
Right. I think one of the things that's interesting, it all depends on which stage, you know, you are investing at, and I think that the earlier you are, the more I think is required of the investor to roll up their sleeves and to help the entrepreneur day by day on sort of the things that later stage VCs don't help on, right? You know, if you're at the early stage and somebody managed to bootstrap to 100K in revenue and then you invest in them, they likely don't know how to write a great investor presentation. So early stage venture capital funds should be on board to help them do that. They may not know how to exactly move an investor down the entire pipeline from discovery to first meeting, second meeting, to getting the soft commitments of capital and closing them. They're not aware of that. They just bootstrap their way all the way to the revenue that they already have. I think that there's an expectation a lot of times that a VC is not only there to have to facilitate challenges that founders have with each other, but they're also on board to just help them work on strategic projects and strategic things all along. That doesn't happen at the later stages, right? When you're a later stage fund and you're writing checks, in the case of Infusionsoft, the Goldman raise and the Bain raise, for example, it's not like Bain Capital came in and said, you know what, Clay, we'd love to talk to you about your target customer. And you know what, we'd also just like to really help you figure out, you know, team dynamics and things like that, right? That's already done. Those things are already figured out. But what they do help you with is they say, here's the capital, here's the expectation. If you meet some of these goals, then we're going to follow on with additional investment as well. So it really is at what stage you're at. I think there's an expectation that there's more homework required, that you know, there should be a homework type approach to the seed stage investor. And plus, at the earliest stage, they're not collecting the management fee that the later stage investors are. So that early stage investor that you do have on board is really on board with you entirely, because their outcome is your outcome. If you have an exit, they have one, and they get to enjoy the same economic reward that you do as well, which is why it's really important to be able to choose that really, really strong investor, the one who you have a really good relationship with, and that's likely not the case for a later stage venture capitalist.
Awesome. And Nate, you know, Romi had just talked about how it really depends on what stage you are. And at Tallwave, I know you guys work with a lot of pre-seed companies who are raising their seed and post-seed, all the way to, you know, a Series A transaction. But what does it mean to sort of be pre-seed, seed, and post-seed? You know, what does that look like?
Yeah, I think first it's good to understand, like, what are different funding mechanisms for a business, because not all businesses should raise venture capital money, right? Like, understanding what type of business you're running and what type of business you want to grow into be, right? Like, there's a lot of great businesses that should never take a dime of outside investment, right? You should bootstrap, use the revenue that you bring in to grow it. It's a lifestyle, it's a family business, it's a legacy business. You also have to think about, how do you want the control of the company to go? If you want to run the show, don't bring in outside investors, right? The minute you take a dime from someone else, they think they should have input on the business. So being conscious of the type of business you want to have, that you want to build, is one of the most important questions to first answer for yourself, right? The second thing is how fast you want to grow. And the third thing is, what type of investor would you want to bring on board? Okay, so like Romi mentioned, there's different stages in the venture process. First type of investors tend to be your family, your friends, and those that know you well. If those aren't family and friends, and you know, I don't know how you define it. But basically, those are the people who will first probably give you a couple bucks to try to get your business off the ground. They help you get the business moving, maybe get the product, the idea, the business plan, the first customers in the door. Then there's investors, which we refer to as angels or super angels. They're not affiliated with a group per se or a fund. They're more of people that have a little bit of money or a lot of money that like to help seed businesses, but most of them also like to mentor. They want to be involved in the business, help you grow. So those are like the two stages of funding that I would call pre-venture capital. And then you get into this weird area where it's all about just what you call things, right? So there's pre-seed, there's seed, there's post-seed, there's bridge, there's A, there's B, there's C, there's X, Y, and Z rounds. It's all it basically means is you start taking money in at a basic stage of your business, and you continue to take more and more money in, right? That's all it really means. Now, when you think about what stage is your business in, most investors want to know what the heck are you trying to accomplish, and how do I have confidence that you're going to be able to achieve what you want to. So in terms of the semantics pre-seed, it typically is still pre-published product. I don't know, Zach, how would you define, like you're still in development? Is that how you would say it?
Pre-product.
Pre-product, yeah. So you have the idea, you're working on developing and building that product, so you need some money to do that, maybe early customer validation. The seed stage tends to be, how we define it is, great, I've got a product, 80-90% built, I've got people who want to pay for it, I've got 3 to 5 people of a team here that we are ready to go do something. Now we need money to scale, tie out the product, hire sales and marketing, go start making a lot of more money. And then Series A is like, great, I'm in a $2 million, $1.5 million, $2 million of revenue each year, or the last year, and I'm ready to just rock it, right? So that's more scale funding. So that's probably the long-winded answer, but hopefully that made sense.
I love it. And this is sort of open to the panel, but you had mentioned that some startups don't even need to raise money, right? But those that do, they should go to the right VC, they should go to the right partner, right? How would an entrepreneur, a startup, entrepreneurs who are just starting their business, who have never really been around the block, understand and know which VC firm, or which smart money to take for the business?
Well, I can take a shot at that. I mean, it really varies. I agree with what these gentlemen said, and the earlier you are, particularly in this market, which is still primarily angel-driven, the people who take an interest in your business to write a check that are professional money often are very willing to help you significantly. You're more than likely, not always, going to have them on your advisory board. I know numerous investors that they end up getting hired to be CEO to run the business when the founder realizes I may not be the best person as a CEO. It comes down to, as I think Romi said, you have to be comfortable in your gut that it's the right investor for you. You do have to network. You will hear everyone say the statement, but it's both sides of the fence for entrepreneurs and investors. You may have to kiss a lot of frogs before you find the right match. And there is nothing wrong with, especially in this market, as I talk to people from other markets around the country, people are in general more accessible here. And you can get to know them better. You can go to events. And as you have more validation of your model, per what Nate was saying, you become more attractive to them. And so at the end of the day, it's not always smart to just go, I'm going with whoever will write me a check. If you're fortunate enough and have a real good business model and people are clamoring for you, you're in the driver's seat. That doesn't always happen. But at the end of the day, you got to be comfortable with what the person on the other side is doing. I've seen a company completely ripped apart by investors, knowing another investor really well and not knowing another investor who is tied into the ecosystem, and the company is just like, there's started to become power struggles and things like that. I can't speak to what happened early on when they brought on those investors, but it's important to get that match. It's important to be coachable. You have to be willing as an entrepreneur to get a lot of advice from people, not just investors, and can you be flexible with what you're hearing coming from that person? And if you don't agree, like, hey, you're going after the wrong target, the wrong business, you got to do 180 degrees different, but in your heart and or with your data or your own validation says you should go that path, even though that $100,000 check is sitting right there for you, it's better to go kiss more frogs. So I think that matchup thing ends up being a big deal. In wealth management in the hedge fund industry, that was key. People would think, oh, your performance is better. A is clearly better than B. But if the people investing with B has a real good relationship and a past and all of that, they'll invest with B for, a percentage or two less of performance just for the trust factor. And I think that happens a lot in the early stage, particularly in this market.
Can I just springboard off?
Please,
real quick?
yeah.
I think, I can't help but agree with a lot of what Randy said. I think, if I can just take another approach to it, there's a good blog out there by Ben Horowitz. Right? He's a great VC at Andreessen Horowitz, and he has a lot of thoughts out there that I think, I like to read. I think they're good for entrepreneurs to read. But he has one narrative. Well, you're a little far back. You might want to move up, buddy. Right? So one of the things is, what an entrepreneur is always doing is that they have to manage their own psychology. And after somebody, right, who's obviously had a few wins before, from him, he feels he has to do it. I've raised a few funds in my career, working on it now, had a few entrepreneurial endeavors. If I could just encourage you all just to be able to do one thing, no matter how much capital I've raised, just it's really important to remember the one truth that I have, that I can't help but believe all the time, no matter where I'm raising money, anytime, is that when you go from no to yes, it's easy to move an investor from no to yes. You can get that. You can get a lot of buy-in there. But why the distance from yes to money in the bank is even further than that, I don't know why. That is the most frustrating thing ever. And you have to manage your entire patience. You have to manage your capability. You have to just take a deep breath, whatever you need to do, because not only are you trying to raise capital, but you're trying to build your company. You're trying to make a strategic hire. You're trying to build a beautiful product. And if you're working in software, you want to have beautiful software, and you're trying to make a critical hire there as well. And I think it's just important all the time. You're doing a mental check a lot of times, because the entire business can just drive you bananas. It really can. It's not a sane proposition what you're going after here. But just remember that when you're working with the investor community, that no to yes is just the first step. When you're working with them and then negotiating with them from yes to capital, that's a whole other space. And you just have to keep things tight. You have to remember what your vision is and what your mission is as well, right? So you want to have an investor who does respect you along the process as well.
Awesome. And Randy, maybe I'll direct this question towards you. Thank you, by the way, Romi. I'll direct this questions towards you. As long as I've been in the sort of Arizona startup scene, about a year and a half now, I've really seen a strong focus in rallying around entrepreneurship, startups, and even now getting into the capital landscape as well. Right, there's a lot of rallying going on to then support entrepreneurs in the ecosystem.
Yeah.
At least specifically referring to Arizona. What role does, and this is from an ACA standpoint of view, right, in economic development, what role does venture capital play, capital in general even, play in sort of the economic development of the landscape?
It's absolutely critical. The market and the world here has changed a lot. I mean, we have example companies, but I have friends who live here in Arizona that didn't know GoDaddy was headquartered in Scottsdale back in the day. Now everyone knows GoDaddy, LifeLock, and Fusionsoft are here. The world has changed drastically just in the last 5 years. I mean, there have been other companies out there, but when I talk to people from other markets, they go, well, you guys aren't like Silicon Valley. I go, I hope not. They have a 50-year head start. Okay, so we're 5 years in. I've talked the same conversation with people in Austin and Boston and everywhere else. So we still have a long way to go. But when it comes to capital, what we would hear all the time, two aspects about this, is that there's no capital in Arizona. And I get that, but just in the innovation challenge alone, which is a subset of the data, over 1,000 unique companies have reported they've raised over $850 million in capital. And people, including sitting at tables with big, huge executives, go, what? I didn't know that. I go, either did we. But now that we have the statistics, it's there. Is all that money from Arizona? No. Be ultra conservative. Maybe Aunt Matilda lives in, Tennessee or whatever for your friends and family. Slice it in